the value of trade globally is down, and it's a subject of interest, considerable interest in G20, WTO, a lot of the government organisations we deal with, big development banks. But as far as HSBC goes, although our volumes of business are down, we are actually seeing the value of the business that we process is up slightly, and the margins have widened to reflect, I guess, people prepared to pay for the strength of the HSBC balance sheet behind them in supporting their business. And so revenue in total is slightly up on last year, which last year, as I said, was a record anyway. There has been some resurgence in letters of credit per se, as people have been unable to get credit insurance. The credit insurers have cut back the amount of cover they're giving in the market anyway, so people who are trying to export overseas, who might have used open account trade in the past, who might have used insured open account trade in the past, they can't get that insurance, so they're saying, well, let's go back to letters of credit. That's the first thing, it's a macro issue. There's then the micro issue where people are saying, whose letters of credit do we want, whose do we trust? And HSBC has been a beneficiary where suppliers in Asia are saying, we want an HSBC letter of credit to the importer who might be in the West or another part of the world. I look after 5 regions. The one region that we really, as an HSBC group, don't have much interest in to date has been in Africa. We have a small presence in South Africa and Egypt. But in terms of Latin America, we have a lot of staff, 45,000 staff, 2,000 or 3,000 retail outlets. So we've got infrastructure, we've got people. What we need now is systems and product. And we are, at the moment, going through a replatforming exercise in Latin America to put group standard systems in, HSBC Net and HSBC Connect, our e-channel capability. And we'll follow that in with product people, client service capability, and sales. And that will bring the Latin American region up to where North America already is, where, although we're not as big as some of the big American banks, we win a lot of very good mandates. We punch above our weight. And then also in Europe, we have very strong coverage in some countries, but we're not geographically spread. In fact, no bank is geographically spread across the whole of the European piece. So we have to work out how can we use alliances or partnerships to produce the coverage that we don't have ourselves. So there's lots to do. It's an exciting opportunity, and there's much to be won. I think you have to do different models in different countries, different regions. Here in Asia, we have in excess of 100,000 retail outlets, distribution outlets, which we can access through the alliances, some more formal than the others, but we have them to allow our customers to use an outlying branch in India or China where we don't have a presence. In Europe, it's slightly different because something like PSD, the Payment Service Directive, and SEPA, is making payment processing, you can centralize much easier, but you still have the problem of collections, and so you need a branch network somewhere to be able to facilitate your customers' collections to be brought into their accounts which they have with you. So it does depend on which region you're talking about and the sort of service you want to provide. Very simplistically, in Australia years ago, we entered an arrangement with the NAB, for example, where our customers could pay in across their branches. That was a very simple, basic solution. In China now we're using Bank of Communications, in which we have a 20% stake, and the technology that we use there is more sophisticated, and customers can do much more in terms of their cash management requirements in China. As I said, it does depend on where we are, the level of sophistication of the market, the size of the geography, and the needs of the customers. The things I would be interested if asked was what sort of technology would an acquisition bring me? Is there something new that I don't have that would help? Or is there a portfolio of customers that I don't have access to at the moment that an acquisition would bring to me? But I'm not specifically looking for something like that. I do talk to suppliers of technology all the time, see what can I buy for myself, but that's different from going to an organisation saying I want to buy you because you've got a platform that I can use. So I'm relatively reactive on the acquisition side, which is a different position necessarily from where the group might be in terms of a global business proposition.
HSBC Group's last acquisition, I believe it was in Indonesia, Bank Economy.
Yeah, we bought a stake in that, which we've just recently upped. That's an interesting example for transaction banking because we are going to put our trade platform into that, and all the branch network that Economy brings to HSBC in Indonesia will strongly reinforce our trade capability and our payments capability in that country. There has been a program within the HSBC Group over the last couple of years or so, led by Ken Harvey, the Group's Chief Technology and Service Officer, CTSO, a program which we call One HSBC. And the idea behind that is to try and shrink the number of systems we have so that we put more volume through single systems rather than less volume through multiple systems. That brings us efficiencies. It also allows us to share best practice across a lot more countries a lot faster. So when we talk about replatforming in Latin America, we're talking about putting in one HSBC systems across the region, which will give us much more capability than perhaps in the older, well, not so older days. In the past, we've been able to achieve just by dropping different systems into different countries. First thing I would say is HSBC doesn't always want to be the first off the mark in terms of new technology. We quite like being a fast follower so that we don't make expensive mistakes. We've done so in the past. We've introduced technology here in Hong Kong, for example, which hasn't been successful, but we prefer therefore to be a fast follower. Now, what are we interested in? We're looking at things like mobile payments, as a lot of our competitors are. We're looking at how we can use workflow efficiently to facilitate customer service. We're looking at some of the new technologies to allow social networking to facilitate access to the retail customer base. There's a lot of different things that we're looking at. Are there any iPod moments for technology in the use of transaction banking? We don't think there are. We think a lot of it is evolving. It won't be sort of a flash in the pan, but we want to be up there making the most of the opportunities as they arise and become commercially viable.
In terms of
two or three things. Firstly, counterparty risk for a corporate treasurer or a financial institution is very important, much more so than it has been in the past. And so they're looking at, firstly, who they do business with. Are we or are we not a strong partner to do business with? And on the back of that, they want flexibility to change. So connectivity into SWIFT, they want to use a SWIFT score capability or a SWIFTnet or whatever makes it easy for them to change institution if they're worried about one. So they can switch assets, they can switch transactional capability, whatever, quickly. On the back of that, they want flexible documentation, fast and easy to adopt without spending a fortune on legal fees to approve all this sort of stuff. So the ability to switch banks is important. The second thing is who's there to provide balance sheet in terms of medium and long-term funding, but also who's there who can provide intraday liquidity. Clearly now regulators are very interested in intraday liquidity because they've seen what's happened in recent months, particularly towards the end of last year, where liquidity was drying up. And so the bigger customers are saying, you know, if we send you big files of payments, can you process those payments not just on an efficiency basis, but can you provide the liquidity to allow us to do this at different times of day with different currencies at different cut-off times? And again, it's the bigger players will be able to benefit. And then moving on, they're saying working capital is now critical to us. Days sale outstanding, days purchase outstanding, inventory churn. Can you provide us liquidity solutions that allow us to gather our cash more quickly, to identify what's trapped in countries where we can't get paid interest, and give us value for that? So the whole management of that liquidity piece is critical to them as well. These are the sorts of areas we're having discussions with customers. The regulatory picture is still evolving. So to try and overcome a particular challenge, we're not yet at that stage. Once you know what the picture is going to be, then you can work out how to address it. We are in dialogue with regulators globally. It's one of the strengths of HSBC. We have a lot of very good contacts, trying to explain the consequences and the unintended consequences of some potential regulations that are being talked about. Clearly regulators are very focused on capital. But they're also focused on liquidity. You know, does a bank have sufficient liquidity and funding to be able to work through how it manages its business in times of crisis? They're looking carefully at those banks, settlement banks in particular institutions, whether it's CLS or Crest or US dollar clearing. Do you have the liquidity to continue to provide to the market on behalf of not just yourself but your third-party customers if there's a crisis? So these are the issues that have been talked about. And many of the regulators are using the Basel II Pillar 2 aspect of that supervision to have discussions with banks about capital. So we need to be in that debate to make sure they all understand what our concerns might be, as well as us understanding what their concerns might be and then working to address them. The picture's changed. I think we are seeing a little bit of an uptick from the north, the developed markets beginning to put in their Christmas orders, a little bit, not a huge amount.
So that's seasonal.
That's a seasonal demand. But what we're also seeing, I think, is